It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady, and this is our hour to talk taxes. And you know, look at September's almost over. We got October, November, and December. So far, they haven't changed the tax laws, so we're really happy about that. I'll tell you right now, gifting is still at $15,000 per person per year. So with the holidays coming up with Christmas, you know, and you want to maybe get some of your money spent for estate planning purposes. Remember, so far it's $15,000 per person per year. And anyway, I'm Esther Gulius, the Tax Lady from EG Tax. You can always get a hold of us through our website at egtax.com, or you can call in right here at the show or text us. Our phone number here in studio is 803-0930, 803-0930, star 930 on a cell phone. Our text is 716-803-0930. And I got my compadres here with me, Christopher Fabian. Hey, Chris.
Hello, Esther.
Hello, Christopher, and Tiffany Fabian.
Hey there, Esther. Happy Saturday.
Happy Saturday to you. I think everybody loves Saturdays.
Yeah.
And, you know, I have to say, last Sunday, I was at the Bills game in Miami. And, gosh, we just had a great time, didn't we?
We had so much fun.
It's
a beautiful
if they could pull
stadium.
off that tomorrow, hello.
Yeah, it's a beautiful stadium. And I got to tell you, the fans in Miami were so respectful of, there were lots of Buffalo fans.
They were more respectful than we were of them, really,
Yeah,
I think. You
they
know,
were
it was,
so wonderful.
But it was great. It was just wonderful.
Yeah. We had a
Okay,
really
so
good
we
time.
got a little over 3 months to go till the end of the year. If you're somebody that has just been completely out in the dark because you still haven't gotten your refund, join the club. I mean, it's just been really, really difficult, and we want to kind of talk about that. But before we do, we have tax school coming up, right?
Yep, we do. Actually, one of the schools already started, but there's a second flight that's beginning in a couple of weeks. And so the class meets twice a week, either in the mornings or evenings. The class is free of charge. You do ever have to purchase the book and the workbook. There's also an online version, and it's a great way to learn taxes from A to Z. And the best thing is that we really, really hope is that you come work at one of our over 30 offices. And so call, go to the website.
It's just a great thing for your own personal. You know, I mean, people have no idea how the tax code works, you know, and so when they get exposure to it, they say, wow, this is kind of like a welfare system. And it is, because so much of tax law isn't you giving to them, it's them giving to you.
Yeah, I got to tell you, I had a mortgage broker have me look at a tax return that somebody did with pen and paper. And my eyes were just about bleeding, the amount of mistakes. And so if this person would have taken our class, I think they would have had a rude awakening or a pleasant.
That's for sure, and they would have had an amended return right away, too.
Yeah.
Okay, so our school starts. If you are interested in joining our school, you can go to our website, right? And register?
Right, you can go to egtax.com. Give us a call in the office at 632-7886.
We have classes all over the place. I mean, we in Niagara County, Erie County, in the suburbs, in South Buffalo.
Even in your own home.
There's classes all over.
Yeah. Yeah, right. There's classes all over. There's in West Seneca, Tonawanda.
Right, and you can also stay home in your jammies and do them, right?
Right. And our flight of schools, you don't have to wear a mask. Sorry, right. Flights.
Right. Oh, that's true. Instead of the plane. Okay. All right. So let's talk about what people are getting in letters, because it's got to be frustrating to be sitting home waiting for your refund. Maybe you sent in a return was done originally with a balance due, but because of the change in unemployment or the change in health insurance, you know you have a refund coming, but the left hand hasn't talked to the right hand yet, and they're sending you dunning letters that says that you owe money. And so the only way that you can rectify it is to go to tax court. That's what they're saying, right?
Yeah, well, it's not even dunning notices. It's just a very generic letter that says, we changed your return, and if you think we're wrong, you have to go to tax court.
Right, and that's very intimidating, but tax court, you really aren't going to tax court. You fill out the form like you're going to tax court. They will give you a date to come in for reconciliation, and at that point in time, you get to talk to a human being. At least that's the way it's been before COVID. And in most cases, everything gets resolved then, because then you have somebody to talk to. Right now, there's just like nobody to talk to.
Right. And a lot of these letters are still for the recovery rebate reconciliation, where the taxpayer said they didn't get the stimulus money on their 2020 tax return, and the IRS says you did. So there's still another way around it, is you fill out a form 3911, which is a trace of your refund.
So let's when you talk about recovery rebate, that's people that didn't get, when they did their tax return, they said we didn't get the stimulus, but they might have, because maybe it came as a credit card, a debit card.
Right. Yep.
And many times people didn't know and they threw them away.
Right. Or they moved and the IRS doesn't forward checks, so it got bounced back to the IRS.
Right.
So
what you have to fill out that form. Now, where do you get the 3911 at?
Right from the IRS.gov. In their search bar, type in Form 3911, and you get a PDF, and it's got to get mailed in. That's
right,
the only
and you should
sad
send
part.
it certified.
Yep, mail it certified.
All right. Good enough. We got a 8030930, 8030930, star 930 on a cell phones. Text us at 716-8030930, and we got a text.
We do. We have a text, and it says, getting in early, Esther, will a comp settlement from the federal be taxable? And so that is the question.
Well, he means workers' comp.
Right.
I'm assuming workman's comp.
And
Yeah.
so if it's workers' comp, then workers' comp is tax-free.
Yep, workman's comp
What
is tax-free.
happens many times is if he's getting a settlement or she's getting a settlement, they might also be getting Social Security. So sometimes what happens is Social Security will pay back workers' comp in the settlement that they get. So if they get a lump sum of money for Social Security, you want to make sure you do the lump sum election for your Social Security as well.
Yeah, I always remember when I'm teaching a class, I always say if you get disability, you sort of get dissed and it's taxable, whereas workman's comp generally is not taxable.
Right, because you're getting so much less money too.
That's right.
Right? Okay, I'm Esther Gillius, the tax lady, from EG Tax, 8030930, 8030930, star 930 on a cell phone. Okay, so if you're getting letters, are they correct? Are they wrong?
Well,
Usually not completely right, hardly ever.
So they might be partially correct, right?
Yes.
And so you just can go to IRS.gov and it gets resolved right away, right?
No.
I know.
No.
So explain what happens. What's the procedure?
It's sort of like you're playing wiffle ball or tennis. You have to respond to the letter, then they get the letter and they work it, and it takes a long time, and then they hand you back another response. And so it's sort of like playing badminton back and forth, but it's usually written correspondence or an amended return. There is no simply talking to them.
Right, because they're still working at home.
Right. Oh,
And
yeah.
they're all backed up.
I just talked to an IRS rep today, and I said, do you know when you guys are going to be back in the office? He's been working there for 14 years. He's a supervisor. He says, I don't know if we'll ever be back in the office. They're doing a plan so we can work like this forever.
Oh, what a great thing that is.
Yeah.
It's just really frustrating. But here's the thing you don't want to do. Like Tiffany is saying that they say you're good. You know you're not good, so you respond to them. They then say we're looking into it, and then they write you back. You have to keep that dialogue going, or else it's just it's swept under the rug, and you'll never be able to reconcile it. So you want to make sure if you're getting a letter, not to ignore it, to make sure that you deal with that letter so that your taxes ultimately will be straightened out.
Yeah, you don't want to you don't want to just ignore it, and you don't want to just pay it. I have so many people that I've talked to, and they just simply pay it. I was talking to somebody on a few Saturdays ago, and he's like, I always get a big refund, and they said I owed $350. I just figured, they were due that, and I'm like, oh no,
No, they just don't do that. And I will, and we're going to take a little break. But on the other side of the break, we're going to talk about some of the other people that filed for unemployment correctly after they changed the tax law, and the people that filed originally, what's happened with their situation. And we'll talk about that on the other side of the break. I'm Esther Gulius, the tax lady, 8030930, 8030930, star 930 on a cell phone. We'll see you on the other side. We are family. I'm Esther Gulius, the tax lady from EG Tax, and if you need the best tax help for the most reasonable fees, I think you're going to find that EG Tax really fits the bill for you, because we really do care. And if you are somebody that's been struggling because there's no response at the IRS and you were on your own, well, you're really not on your own. If you just give us a call, we'll help you. So it will certainly put you in the right direction. Anyway.
Yeah, and then there's even a department that we have that does offers and compromises. But Chris, you've been wanting to say something for a while.
Right. We were talking about letters from the IRS. The thing is, people got to remember, if you just pay the IRS, you're automatically conceding to the New York State change as well.
That's true.
And people don't realize that, because it will be a year later and you'll get a letter from New York State saying, hey, we saw the IRS changed your return. Now you owe us money too.
Right, because the one piggybacks on the other. And a lot of times people don't realize that.
Yep.
So they can be completely wrong. You let it go. You pay them, and then the state of New York is going to be on your case with penalty and interest, right?
Right.
All right, we have a text.
We do. It says, hi, Esther and crew. Since the current administration is spending money with reckless abandonment, what's the current national deficit? This is obviously becoming a national security concern. Thank you so much, Mark.
Well, I mean,
it's 28 trillion.
Yeah, I mean, the national debt is growing by leaps and bounds every second, because we aren't paying down the debt. And what they're proposing, of course, to fund this $5 or $6 or $7 or $8 trillion expansion of so-called what's the word for bridges and roads? Infrastructure.
That's it.
First they have the infrastructure for bridges and roads, then there's personal infrastructure for daycare and things of that nature. So they're proposing gigantic changes in the tax law. Certainly, if that's why we vote, to hold people accountable. That's everybody's responsibility to do that. If you don't vote, then you shouldn't complain. I will tell you that.
Yeah,
and it's getting tough.
Right, and I know I saw a thing too where they said, everybody's heard Biden's only going after people who make more than $400,000. But then I also read another report that they think all tax rates are going to go up 3%.
Right.
So, that means somebody who makes $25,000, their taxes are going up.
Right.
It's
well,
not
and
just
the other thing is the passive taxes that nobody even talks about. When you have inflation, and looking at inflation now, it's 6%. When you have inflation, the cost of gasoline's an extra $1 something a gallon.
Yep.
People have to figure that in, because it reduces the amount of expendable money that you have. So it's kind of a passive tax.
Yeah.
When inflation happens.
And I was talking to somebody the other day, and I said, you're self-employed, and you really want to make sure, you have to be honest, and you want to make sure as a self-employed person you're paying into Social Security, and so that when you retire someday you get Social Security. And he's like, yeah, but is there going to be Social Security someday?
That's true. I just saw a report the other day by 2026.
Yeah.
Medicare is supposed to be bankrupt, and So,
And-
I mean,
and
we're
I-
really
and I-
living in tough times, and I don't mean to wax political, but, you have to really look objectively at what you really want.
And
in
I,
your
I
government.
said to him, well, they got to do a patch. They got to do a fix. But how many patches and how many fixes?
No, but they aren't doing a patch and a fix. I mean, they aren't dealing with it. And just like changing the budget, increasing the budget deficit right now that they're going to fight about this week. Nobody deals with solving the problem. They just let the problem get bigger and bigger. And until there's a crisis, nobody's going to deal with it. So it's coming down the pipe.
And I got to tell you, you didn't mean to get political. There was a text, and you're responding to it.
Okay, so let's talk about it. There's people write me all the time that they haven't been getting their additional child tax credit. What is the child tax credit that people are getting, and why would they be getting it now?
Well, because the IRS changed the child tax credit from $2,000 a child for people who make under $150,000 to $3,600 if your child is under age 6, and now if they're from age 6 to age 17, you get $3,000 per child. So what they did was say, well, people need it now, so they're giving it to them monthly.
Okay, so, but what I'm getting letters is that they aren't getting the money. And so what can people do, and should they do it? And what they have to understand is if you're getting it up front, you're not going to get it on your tax return.
Right. Yeah.
And the worst thing is if you moved and they sent the money out, just like we talked about at the beginning of the show, if they sent that check out to your address and you moved and they're not forwarding it, as far as they're concerned, they paid you. And when they send you this reconciliation form telling how much they paid you in January, if you didn't deal with it and change your address, they're going to think they paid you, and they will reduce your eligible additional child tax credit. So that's something you want to make sure you deal with right now. And you go to
Exactly.
the IRS.gov. Additional child tax credit. By the way, the $2,000 child tax credit is still in effect, but for people that have income over $150,000.
Right.
That's right.
Yep.
Why?
So
gosh.
it's like $3,600, 6 and under, $3,000 under age 18. Then if your income is over $150,000, then it goes back to $2,000, but I believe it's back to children under the age of 18, right? Under the age of 17, because it goes back to the original law.
Right.
So-
It can get very confusing out there. I mean, they're just changing things to basically change things.
All right, and
right
so
now.
and then here's the other thing. Let's say that you're a non-custodial parent, and every other year you and your ex-spouse switch off dependents. So they're looking at the 2020 tax return. They see you have the kids on your tax return, and so they're sending you that advanced child tax credit up front. But this year in 2021, you're not going to claim the kids. So what happens in that situation? Because now it goes to the other spouse.
Yeah, it does.
Now you got to pay it back.
You'll end up paying it back.
It's gonna be
So
so
it's not
crazy.
pennies from heaven, I will tell you. You know, it always sounds great when you're getting the extra money, but I will tell you, if you do not have those children on your tax return this year because they're on the other former spouse's tax return, then they're going to get it, and you're going to have to pay it back. So you want to make sure you deal with that.
And we're talking about the IRS being backlogged. The management task for this is just so daunting from our point of view and from their point of view.
They haven't even put up there yet. It's now October. The link to add newborns to.
But the great thing is, if you had a child this year and you're entitled to the $3,600 additional child tax credit, don't worry, you're going to get it on your 2021 return. And in many ways, I almost think that's cleaner. I don't know what you guys think, but anytime you're going to let the Internal Revenue Service, who it looks like is an inexact science lately, do the accounting work on how much they paid you or how much you're entitled to, it just can be such a terrible thing because they don't equal what you know is to be true, and then it ends up to be like, oh no, you're wrong. Oh yes, we are wrong. Oh yes, we're right. No, you're wrong. And so sometimes it's just cleaner to just put it on the tax return.
Absolutely. I mean, there used to be something called the Advanced Earned Income Credit, and so people
And they did away with that.
And they did away with that. So this is something that they've done before, and I not many people got the Advanced Earned Income Credit, but it's almost like they forced it on people this time,
Right. So let's say that you're a non-custodial parent who last year you had kids that were between the ages of 6 and 17, and so now they're paying you $250 per kid for 2 kids. You're getting $500 a month. Oh, goody for you! And so for 6 months, you're getting $3,000. Well, if this year they're not on your tax return because they're on the former spouse's tax return, you're going to pay back $3,000. So if I were you, I would look at correcting that situation so that you don't get egg on your face, and then you'll say, I didn't know about this. Well, we're telling you.
Right, exactly.
Right?
Yep.
That's cool.
All right. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. Okay, before we go to break, anything quick that you want to talk about?
Oh, I was going to say that we have a department that does offers and compromises because you were talking about helping people. So if you're somebody out there who owes thousands and thousands and thousands of dollars to the IRS or New York State, there's programs out there for you. And so we just call us and we can help you with something. You've heard those advertisements where you can pay pennies on the dollar and the Good Start program. Well, we do that too. So just give us a buzz.
Yeah, and the thing is with like anything, if your credit is bad or if you owe the IRS money, unless you're proactive, they're just going to keep sending you bills. Mm-hmm. And ultimately, if you ever do get any assets, they'll come and seize the assets. So it's much better for you to be proactive so that you can be in charge of your finances and your credit. And I can't tell you, good credit is so important because it helps you to get a job. It helps you with your insurances. It helps you, the interest rate that you have to pay on mortgages. Those are some of the things that EG Tax will help you with. And Tiffany is, of course, with the offers and compromise, you can't believe how much she can save you by doing this program. Without doing the forms and the program, they will not let that obligation go. So you want to make sure you call EG Tax for help, and you ask for Tiffany Fabian, and she'll help you, right?
Right.
Okay, so we're going to break for the news right now. I'm Esther Golias, the tax lady. See you on the other side. I'm Esther Golias, the tax lady from EG Tax. Don't forget, our school starts in October, and we talk about all this stuff. For me, it's fascinating. I love to look at all the options and all the ways that we can help people. And I will tell you, your daughter's in a tax class.
I was just thinking
Tiffany?
about that. She's been
And she said, "Wow, these rules are really hard."
really hard. Chris, you want
are.
to
They're
elaborate?
really hard.
How do you know all these
Chris is her
rules?
personal tutor, and often we just have to walk around on eggshells. And I was sitting at the kitchen table the other day. Get away from the kitchen table, she said. Just
Oh, because
move.
she's studying?
Yes, move. Go. Oh,
Yeah,
okay.
well, I'll
A
tell
head
you. All
down
right,
between
so
my legs.
I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on your cell phone. Text us at 716-8030930. Something that has changed is now senior citizens over the age of 65 can get an earned income credit. And so if you're somebody that's been thinking about doing a part-time job, going down to Walmart, everybody's going to hire you. They'd love to hire you. You would get an earned income credit, which could really help you.
Yeah,
But if
what
you
a nice
don't
thing.
have earned income, you won't get the earned income
They've
credit.
never done this before for seniors, and so what a nice opportunity. And I can tell you the workforce really needs everybody to work. You drive down the road, help wanted, help wanted, help wanted, so it's a great thing.
Yeah, and for me, I mean, being a younger, older person myself, I mean, I really respect the work ethic of these senior employees.
Yeah.
They're wonderful.
right.
They have good work ethic. So senior citizens this year, first time ever. If you don't have a job, you won't get it. But think about maybe getting a part-time job. Mm-hmm. Right. And then the other thing is, let's talk about RMDs while we're on the subject of seniors. What is an RMD? Who should take it? And there's a way kind of around it, right?
Right. Well, the RMD is your required minimum distributions. When you hit age 72, you're now required to take money out of your IRAs and your 401ks. If you don't take it out, there is a 50% penalty for what you were supposed to. So if you were supposed to take out $10,000, then your penalty is $5,000 if you didn't.
Which is a pretty big penalty,
it's
right?
a pretty substantial penalty. Yep.
So if you're over 72, you have to do a required minimum distribution on your IRAs, annuities, pension plans that you haven't been withdrawing on. If you don't do it, they're going to charge you a 50% penalty. But wait, there's a way that some people may be able to skin the cat. and that would be what?
Direct charity rollover of your IRA right to a 501c3 at
Right.
charity.
So if you have an IRA up to $100,000, you can do a rollover. If you're somebody that's going to give to charity anyway, don't do it through a check. Do it through your IRA rollover. So you can roll it directly from your IRA to whatever charity, and that amount that you roll over to your charity up to $100,000 is going to be non-taxable,
Correct.
right?
Yes.
And so that's kind of a good thing.
Yep.
Okay, well, let's go to the phones, and we'll talk to line one.
Yep. We've got Gentry.
That's what it says Gentry, but I wasn't sure it was really Gentry. Love the name. Hi, Gentry.
Just a basic call. Calling because this has never happened before. Have not received the refund from IRS.
All right, so have you gone to irs.gov
Yes.
and you went on Where's My Refund?
Information says do not on
Pardon me?
system or cannot locate or something of that nature.
Do they say they're processing it?
Pardon?
Do they say they're processing it, or do they just say that they can't find it?
No, the process. They didn't say they couldn't find it. I shouldn't use that.
Well, sometimes they say that they don't have it.
Yeah. Did you mail
but they
in
said
your-
that they're processing it, right?
No. He said they can't find it.
Right, but also, looking at the computer says not to refile because you got all the information. You could just simply, but they say do not refile.
Did you
Okay,
file
well,
it?
first of all, if they can't find it, maybe they didn't get it. Did you do it yourself?
Yes,
Did you send it in paper?
and I've never had a problem.
Did you send it in paper?
Yes.
Okay, so here's the problem. There was never COVID before. It used to be in the good old days, 2 years ago, that there were IRS workers working in the Internal Revenue Service building, and they were processing all these returns electronically, and everything went great. Well, now they're completely scattered around the entire United States, the IRS workers, and so getting to the paper returns and the paper mailing has become a problem. And so that's why people are not getting the satisfaction that have mailed in the tax returns paper that they had gotten in the past, because the workers just don't have access to the paper products anymore like they used to. So what I'd suggest you do is we should call.
Yeah, I was going to say, call me on Monday, 632-7886. And Gentry, ask for me because I have lots of patience, and then I do. Just call me, and we'll call the IRS together and try to get to the bottom of this.
Right. So
And-
call 632-7886.
Into the hundreds of thousands who had not received their return.
Right, but most people now have gotten their refunds. So, and, did you not use a computer software? You
No.
did it via paper?
Yes.
Well, Gentry.
Yes.
Yes,
said it-
yeah. Just call me.
Yeah,
call
call
me.
her, because if in fact they haven't gotten it, we can always do it paper. We can always do it electronic and get it into the system. So call 632-7886. Ask for Tiffany. If you don't call, then
What-
that's up to you. But there's no charge. We're very happy to help you to locate your refund, okay?
What number is the call?
632-7886.
Okay.
All right?
Thank you.
Thanks for calling.
Yeah,
All
unfortunately,
right, let's go to our text. What you got, Chris?
Yeah.
go ahead, Tiff.
Okay. Any news on what the IRS is going to do about the overpayment that they gave for the unemployment?
Okay, and that's where I'm at right now, because the people that have gotten the overpayment from the $10,200 adjustment that was later changed, that had filed after February, they got their refunds, but they paid them too much. First of all, that means that the people that filed correctly the end of February, March, and April are getting shafted, because the people that they fixed incorrectly got the extra $10,200 even if they weren't entitled to it. So we're working with the National Association of Tax Professionals to find out what they think to do, because really the right thing would be the people moving forward that in February, March, and April that did it correctly, they should amend their returns and get the money back too, right?
Right, that
yeah.
did it in April. Yeah.
It doesn't seem fair. It's not
I know
fair.
it's not fair. So what they did was they gave the extra 10 too, even if you didn't have full unemployment as a spouse, and so it ended up giving extra refund money to those taxpayers. And the IRS is so disorganized right now, you can't even discuss it with them.
Nope. You
Right?
cannot. You cannot. We've tried to call the IRS, and actually we did talk to an IRS rep, and they're like, I don't know. I mean, they don't know. You can talk to them, but they don't know.
But the thing is, if they let this stand, if these people that got the extra benefit of the unemployment who had filed incorrectly and then the IRS fixed it, if that same benefit is not provided to the next group who did it correctly, that's wrong.
It is wrong. It is
And
so wrong.
We'll be ready to file amended returns.
Yeah.
So no, we just don't know.
Right.
But it's
And
a good
and we've
question.
had
But we're working on it.
Yep. When there's still people out there who are still waiting for their amended or quote unquote amended return for the unemployment correction to come in, because they're not truly amended, the IRS is correcting them. There's still a lot of people out there who still haven't received it. So I hate to say it, but you still got to have patience out there.
It's terrible.
Yep.
Okay, and then we're going to go to Tim. Hey, Tim, how can we help you?
How are you?
Good, Tim. What can we help you with, sir?
Actually, I've been listening to you on the way home, and I got home and I got a letter saying we previously sent you a notice stating we changed the amount claimed as a recovery rebate credit.
Uh-huh.
I don't know if that's the letter you're talking about.
Yes.
Yeah.
We're talking about that. Yep.
Yep. That's the generic one that says you got to go to tax court, right?
I don't know if it says court, but I just was reading it says that the amount exceeded over $75,000 or $150,000.
Yep. That's the one.
Which is, I guess it's generic because I don't even come close to either of those amounts. Not even close.
Right. Okay. Did you get all the first stimulus or and the second stimulus?
I believe I did get at least one of them. I'm not positive I got two, but I definitely believe I might have got two. Now you're saying it. I think I might have got two. But I still wouldn't have been even close to that amount. Not even close.
Right.
So
but
why don't you call us on Monday? We'll take a look at that letter for
But
you.
Chris has a solution.
when you filed your return, did you say you didn't receive the stimulus?
I believe what happened, and I actually work with you guys, so I believe what happened was I filed, and then I think they gave you back the tax money that they took from you. So I think in the beginning we had they took tax on the amount, and then they gave it back to us.
Well, you must have said you didn't get the stimulus, and then you got the stimulus in the mail. Then they adjusted your refund saying, no, you already got it. But like
But
Esther...
needless to say, call us, because we want to get to the bottom of it.
I will, and I appreciate it because I work with you guys directly. So
All
thank
right, well, thank you very
you.
much. Appreciate
But
it.
it
is
isn't.
so
It
frustrating.
isn't a scam. It's a legitimate letter. You know, it
Kind
seems
of
like
a scam.
Yeah, and the thing is, if people still want to go to tax court, it's a $60 filing fee for tax court. I mean,
But I will tell you, sometimes that's the only way to that you get to talk to somebody.
That's
Yep.
true.
Yep. And
All right. I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Our text number is 716-8030930. We're going to take a short break, and we'll be back on the other side. Hey, I'm Esther Gullius, the tax lady from EG Tax. You know we love you and we want to help you. You can hear our frustration. It's very difficult when, unfortunately, the keeper of the keys doesn't talk to anybody. And we're trying our very best. And I will tell you, Tiffany does, when she says she has patience, she does have patience. And because we have a practitioner hotline that you don't have available, and she'll make those calls for you. So we sure want to help.
Well,
I'm Esther Gullius, the tax lady, Christopher Fabian, Tiffany Fabian. Our phone number, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. I want to tell you a little story. The other day, my phone rings, and I said, hello, and this recording says, this is the FBI, and we need to speak to you about a urgent matter. And I knew it was a fraud, So I waited, and this gentleman gets on the phone, and he says, may I have your first name? And I made up a name, and he gave me my last name and my zip code. And then he says, what case number have you been assigned? And I said, I don't have a case number. He said, all right, let me go look up your records and we'll be back. And he comes back, and he sounded really good, I have to tell you. He says, okay, so I have your case number. He gives me this case number like I had just lied to him. So he gave me this case number, and like I was legit. And then he said, now, all right, we're going to start off. And he said, once we start, this is a recorded message. You cannot hang up until we're done under penalties of perjury. He went on and on. So I thought, all right, I'll play along. Starts off, what's your social security number?
Oh.
And I said, how do you look at yourself in the mirror? You fraud. And then click, that was it. But I will just tell you, you have to be really careful when you hear these people call. They sound really good. So don't give out your social security number.
Yeah, if the first question
they know
is,
your social security
yeah,
number.
if that was the FBI, they have your social. They have everything about you.
Everything about you. Anyway, the FBI is not going to call me. But, okay, want to talk about, I talked about the earned income credit. Oh, okay. When you're taking out your required minimum distribution, many people should take out more than they're required. Why would that be?
Because they might be below the filing threshold or the point that they pay taxes. So why not take out more tax-free? It's a really
That's right.
good plan.
There are people that say, I want to put money into a Roth. I want to put money into a Roth because when I take it out, I can take out tax-free. Okay. So let's just give an example. Let's say I got a couple who make $40,000 in Social Security, and they don't have any other source of income. All right. And right now they have to do their RMD. And so they think, oh my gosh, I have to take out $10,000 out of my RMD. They're going to pay zero taxes on that because their income's low enough that they'll pay zero taxes. So they'll take $10,000 out of their RMD tax free. So the question is, can they take more out?
Right.
So if they took $24,000 out of their IRA, they would still not pay any taxes. And so they would it's like a Roth. But people don't know, with their high standard deduction, they don't pay taxes. And so if you're somebody that has to take money out of your IRA, maybe you're retired, you're 62 and you don't have to take it out, but you are living off of Social Security, for instance, and you don't have enough to pay taxes, you're not working, you don't have a pension plan, you can take money out of your IRAs and other annuities, many times a lot of money, completely tax-free,
Right.
just like a Roth. So many people that are putting money from a traditional into a Roth so they don't have to pay taxes when they take it out, they wouldn't have paid taxes anyway.
Yeah, I mean, if
Right?
you're 65, you're married and your and both your spouse are over 65, your standard deduction for 2021 is almost $28,000.
That's huge.
So you can take, so that's how much taxable income you can have before you pay taxes. So if your only other source of income is your IRA and you're wondering, oh my gosh, should we have to take money out of our IRA, take more out. And if you don't know how much you can take out and have it be tax-free, give us a call. We'll tell you.
Yeah, the computation is really easy. So we could help you over the phone, and it's a great idea. And even if you alluded to somebody getting a job at Walmart who's a senior, and so if they're below that filing threshold, again, they still don't pay taxes, but they might potentially get the earned income credit. So
And they can contribute to an IRA.
And how many people say, oh, I want to roll over money into a Roth? I had a gentleman the other day that called, and he said, Esther, I think I'm going to roll over $300,000 from my traditional IRA to my Roth. And I said, oh, well, that's good. Like he's in the almost 30% bracket. I said, so you're going to pay $90,000 to do that. And he said, 90,000. He says it's tax-free. I said, it's tax-free when you take it out. But if you do a rollover from a traditional to a Roth, it's going to be, you pay the taxes up front.
Right.
yeah.
So, and I'm going to tell you, many people listening right now, if they only sat down with their accountant and said, how much can I take out, especially if you're living on Social Security and you're really not tapping the well, so to speak, on your IRA, there is a lot of money that you can take out completely tax-free, which is better than a Roth because you got the benefit up front and you get the benefit at the back end.
That's right.
Yeah.
Right?
Right. And that's the thing. People, the idea of Roths sounds great. But how many people do we see contribute to Roths that don't have a guaranteed pension? The only money they're going to have coming in is their
Money that they can set aside.
Right. So they may not, with the current tax, standard deduction, you just heard for a married couple how high it's going to be. Imagine what it's going to be in 10 years, 20 years. I mean, you could be paying 12%, 22%, 25% right now when you may pay to nothing later on. So you're thinking you're saving all this money, but in essence, you just cost yourself money. And that's what people don't understand.
That's true. Absolutely. We have a text. Anybody
We
wanna read
do.
it?
Yep. It says, my daughter received $500 child tax credit for July and August, but did not receive anything for September. What should she do?
Okay, so just like we talked about, whatever she gets, I don't know if she moved, but if her bank, they went from direct deposits to sending checks, I would suggest you go to irs.gov for the child tax credit, make sure the information is correct. It's just like everything. Everything they said is not the way, it was advertised one way. How it's being played out is another.
Now, I know.
So you want to make sure that you have all the right information there so that they don't have any reason to have not mailed your daughter the money.
Now, I know the IRS had a computer glitch, and it was it last month, Chris? And so they mixed up.
They mailed out checks.
And so instead of doing it direct depositly,
that's
they
my point.
mailed out checks.
What's advertised isn't coming to pass.
Right.
Right?
Right.
I mean, and again, I think people should call Schumer. I think people should call their Gillibrand and ask, why is there not better access? Why why is the Internal Revenue Service underfunded? They really have to get to the bottom of this because it's just one thing after another thing after another thing, and we're coming upon another tax season.
Yeah.
Right. And I know they're going to blame, well, it's all Trump's fault because he cut the funding. Well, now Biden's been in the office for almost a year.
He could add the funding.
Let's add the funding. Right. Should we go to Pat on the phone?
Let's go to the call.
Hey,
Hello,
Pat.
how can I help you?
Hi. I'm 72. My husband's 74. I have an IRA from, two IRAs actually, where my money is, but they're both from my name, but my husband's my beneficiary. This year I took out an amount because I am 72. Is it 20% of what you have in there?
Okay.
Is there
First, do you have any other source of income except for that IRA?
just Social Security?
All right, so you're my perfect example. How much do you and your husband get a month?
Roughly, he gets about 900, and I get about 1,300.
All right, so you guys get about $2,000 a month, right? $24,000 in a year. So you don't pay any taxes. So you're my exact example. How much did you take out of your IRA when you did your RMD?
I took 20,000 out, which I knew was more than.
That's going to be completely tax-free. You can actually take out probably another $5,000 or $6,000 and have it still be tax-free.
I don't understand. When they sent me the check, they withheld.
You're going to get all that withholding
You're going to
back.
get
Gotta
all
file
that
a
money
return.
back, and you're going to think you got a refund of something miraculous, but it really was money they shouldn't have withheld.
Really?
Yes. Really?
Yeah, and it's not 20%. They did 20% withholding. Is that what you were talking about in the beginning?
Yeah.
They gave me a check of 16,000.
Yeah, they did 20. Yeah,
they
so
took
you're going to have a
so
nice.
you're going to get it all back. But for everybody else listening, if you're in the same situation as this client, this taxpayer, you don't have to have them withhold anything because you don't pay any taxes on it. Just because they withhold it doesn't mean that that they should withhold it. And unfortunately, then next year she's going to be waiting for her refund. So before you take money out of your IRA or your annuities, give EG Tax a call. We'll tell you if you should have anything withheld. And quite frankly, she should have an extra $5,000 or $6,000 withheld, and she still won't pay taxes.
Right, coming out of her.
Come out of her IRA.
Right.
All right?
Right. And I know when she first called, I just want to make it clear for people when she said, "Oh, I took 20% out of her IRA." She took 20% of her withholding, not 20% out of her IRA. That's
Right.
not the RMD. The RMD is a divisor rate, and you devise the first year
She
at
meant
70.
her withholding.
Right,
She took out
right.
20% withholding. Right. But I will tell you, it happens all the time, and people don't know. People think they're so ingrained, you got to withhold, you got to withhold, you got to withhold. And it's true, you do have to withhold if you owe money. But if you don't owe money, then you shouldn't withhold. And many people are over withholding, especially if you have children. With all these child tax credits, additional child tax credits, you're not going to pay taxes. So why sit around and wait for refunds that God knows when they're going to be coming out? Change your W-4 so they aren't taking out as much as they are possibly right now, because you don't need to have withholding. Why would you live on less money when you can have more take-home pay?
Right.
Absolutely.
And by the way, if you're in the process of getting a divorce, you got to make sure that you understand whoever is going to claim that child on their tax return is going to get those credits of $3,600 for children under the age of 6 and $3,000 for children under the age of 18. So that's a lot of money, and so that should kind of all figure in when you're doing your planning for divorce.
Right.
Right?
Yep.
It should. And
All
looking
right.
at the kids.
I'm Esther Gullius, the tax lady from EG Tax. If you're interested in our tax school, you can go to our website at egtax.com. If you're not computer literate, that's okay. We'll teach you on computer. I think you'll find the class interesting. You can call us at 632-7886, 632-7886. Amy is our upfront customer service person. She'll help you to sign up. I think you'll find it interesting. And until next week, I'm Esther Gullius, the tax lady. Go to egtax.com with Christopher Fabian, Tiffany Fabian. Have a great day, great weekend. Go Bills. We'll talk to you next week.